Well, hello, members. It's June 19th weekly review. Take a look at what happened last week, what we think is going to happen in the coming one. If we consider what happened last week, actually the markets held up pretty well. They were down 2% at most here on the Nasdaq, 1.6 on Russell, and basically a percent on the S&P 500 and the Dow Jones. Now, for it to be down that little, given how bad it traded to start with, is actually pretty good. I mean, so if I pull up the S&P 500 chart, let's grab that chart and start with it. You know, we'd had a lot of pressure to the downside pretty much for a week. We made the high. We came off 4 straight days straight down. Another negative day here, the big reversal on Thursday, and then some down on Friday. And it looked as if we should get some follow through on Friday, but in fact we didn't. The end result here was, even though we'd had this steep decline to begin with, the end result was not that bad, down 1% after 8 straight days or 7 straight days of trying to trade lower, and even the bar that reversed, it traded a lot lower before it reversed. So considering what happened, really not that bad overall. Let's take a look at the notes here and kind of go through this real quick. Pressure out of 4 or 5 days, big reversal on Thursday kind of took the sting out of it. The big unknowns or the big knowns that are out there, but we don't know what's going to happen, is the Brexit vote and then earnings. And on the Brexit, the issue is that they're at the point now where we could actually see the buy the news. It doesn't look like it's going to take place. If we look at the currency markets, in particular the British pound, huge reversal on Thursday. That was what set the markets back up, and then the pound just continued on up. If you view this in the context of the weekly chart, it came down, tried to test those lows, right? Didn't get to them, or actually did get to them. Volume huge, but did reverse by the end. Now, when you see this kind of big volume on a test, you can expect it to try and get back down there, but the fact that it reversed as hard as it did tells you that this large decline that's been taking place here maybe has run its course, and maybe it's just about done. We can't say that yet, but it just has that feel the way it's trading. You came back up, you did a bearish retest regen on the monthly, trying to regenerate lower, but then you get this wide push back to the top side. It just has the feel of, yeah, maybe we test one more time here soon. But do try to push this back higher. So the Brexit vote doesn't look to me like it's actually going to happen. The worst case would be some sort of delay in the vote, continued uncertainty. If it takes place, they don't, you're going to see the pound soar, and the dollar is going to move down off of that. If we look at the real weakness here in our markets, it's the NDX, the Nasdaq. Those markets, in particular the NDX, really continue to struggle. It's probably the biggest negative out there, that you can't get technology to even help on the lead. If we look at the NDX here, big volume on Friday on the quad witching. It was an inside bar though, but this continuation move down really didn't even begin to stop on Friday, just continued. So you close under the big wide price spread breakout bar, and this is a negative situation on the NDX. Now, it doesn't look that bad. S&P doesn't look that bad on the Dow. Even the Nasdaq doesn't look that bad, but the NDX really looks horrible. And you don't have to look much farther than the big caps to see why, and the biotechnology. Let me get the right symbol in here. So if we look at Apple, for example, big move down, continues down, just cannot find itself. Volume expands on Friday. More bad news with respect to sales and China in particular. Microsoft, after that takeover or that bid for LinkedIn, it traded all the way to the lows with volume. That looks like it will probably trade back down there again before it's over. And then finally, if you look at Google, Google itself had a huge trade down this week as well. So, all the 3 big caps, which are about a third of that index, just simply can't trade higher. And then the last piece of it is the biotechs. Biotechs also continue to get hit. I was in a conference call I'm not sure what the day was, but we were talking, and this was with the mentors. We were talking about this zone as being the key zone, and a break under it was a short. And man, was it ever a short! It just continues down. So, if anybody took that trade, it's a good trade. It's going to try to trade into the swing point low now, probably before it's done. If it stays in this bar, one more bar, from my opinion. So that's the way the IBB looks. That's the way the big cap tech looks. That's why the NDX can't move, and that is the big problem in this market. So you've got strength in the S&P, even strength in the Russell to some extent, still, even though it came off a little bit on this pullback. But the NDX is a drag, and the NDX typically is what leads the market higher, not lags it. If you remember last year, if we pull the NDX up from a year ago, the NDX was the only one that made a new high, right? You didn't get that elsewhere. The NDX made new highs, everybody else failed. And it's a stark difference, right? Actually, we have to go back farther. This was the November time frame, but if you go back farther, it actually made highs even before that. Only index doing it. All the others were range bound. The NDX was the one that fooled me, made me think, okay, because it's the leader, made me think the others would come with it. Didn't happen. And that actually was a bad thing for me because I was betting on the NDX. So now we have the opposite. NDX is the weakest. Will the others pull it up, or will it lead the others down? Well, fool me once, fool me twice, don't fool me three times. This is the second time. Can I believe it's going to pull everybody down with it? No, I can't really believe that. I have to look at the general market as a whole, and it looks to me like, they can't seem to take this market down, and this market's going to hang there with all this bad news. And part of that is, if you just look at the money flows, so much fear of what's going to happen continues to just inundate these markets. You see it all the time, over and over, and yet the markets are within 2% of their all-time highs. So it's hard to get too bearish here. At the same time, there's more headwinds, and it is summer trading, but the market simply doesn't want to give it up yet. Currencies, they don't appear to be supporting that Brexit vote. I already showed you that so far the currencies in general aren't moving that much, even with the Fed saying they're not going to hike the rates, and actually sounding more and more dovish every day. And I postulated, and I wondered to myself, is the Fed starting to think we're going to get some sort of a recession? Is that the thought now? Is it turning more and more to that? We know we don't get business investments. Businesses has been tight money now for years, and it doesn't look to be changing. And so I wonder if the Fed thinks they're boxed in and they simply can't do anything about it. There's some subtle hints that this market's not ready to fall yet, even with the NDX keeping a lid on the advances. The S&P has enough breadth that even if we're going to roll here, I suspect it's going to take longer to do that. And if I look at the S&P 500 on a weekly time frame, and let me grab the weekly here for you. If I look at it on a weekly time frame, that same pattern that we talked about, that consolidation pattern, and then eventually the drop out of it, if it's going to happen, I suspect it's going to happen out here somewhere, right out in this time frame. There's just too much strength here for them not to try and buy these lows if in fact it gets down there again. And so the key area, the same key area that we've keyed on before, it's this bar here. We've traded into it once. You'd rather not see it trade into it again, but even if it does, I suspect it's going to hold one more time, at least. If we get through it, the next area is this bar. That would be about 2010. That would be my next target on some sort of downside, flip around and trade it back up move. Worst case, I would think this top of this bar. And I'm not talking about next week. I'm talking about the next few weeks in terms of where that might trade. Going back to the notes here, there's no real sector standing out at this point. The one thing that has stood out is oil. I had talked about oil market, $50 being kind of a key area that this market was probably going to be unable to trade over. And in fact, it did get over it, but it gave it right up and traded right back down. And it's got to bounce Let's get the oil market. It's got a bounce, attempting to start here at this point in time, but I suspect as it comes back in here, it's doing bearish retest regens, and there's two of them. I suspect it's going to at least trade lower off the higher one, which is this one, and try to trade to the downside. So we're right at the critical point to start with here at the beginning of the week. If we do get over this, expect it to be sold again up into this area. So if you're looking for shorts, to me that's the greener pasture if you're trying to short something rather than trying to short the indexes. One thing that stands out to me is the earnings expectations are low, yet the market's near its all-time highs. If they come in better than expected, and better than expected meaning they don't beat by a penny, but they beat by 2 or 3 cents, and you get a lot of them. You get some big names, maybe Microsoft, maybe Google. This market's going to probably turn and run and pop up to some new highs. So that's coming up to about 3 weeks from now, and I think that's going to be a watershed moment, either up or down. Bottom line here, market's pricing in this potential Brexit finally and the earnings disappointments, all of that. The potential for this upside surprise seems to exist to me. We have enough market strength in terms of qualified trends that are bullish. That really hasn't tailed off much. It still looks strong to me. If you look at the sectors, if you look at the qualified trends of the indexes and sectors, they're still looking strong. They're not that overextended yet. They can continue to hang up here for a while longer and potentially get a poke up and do some short covering above the all-time highs. Potential scenarios last week, we hit it right on the head there. It was perfect in terms of a call. What I think is going to happen this week, let's pull out the charts here again. One case is for a potential, let me grab my S&P again. Probably the best case actually is for a push back up to do a full retest regen. You got a swing point low here, you broke it, right? Top of that is right around 2100. To get up into that and push right to the top of it and hold there would probably be the best case. My most likely case is to actually get up near that and hang somewhere up in here. So that, to me, that's probably the best case. What's the worst case? The worst case is just blow it all away. You come and break this down where we got that nice reversal, which I suspect is going to hold. But the worst case would be to come down here and hit these swing point lows and start breaking them all. And there's a lot of them starting to collect. So, a push through here could get a little escalation to the downside, which were those numbers that I pointed out at the very beginning there. So that's the way it looks to me. The big news this week, of course, is Brexit. I think it's going to be very choppy up and down, but I do expect these lows from last week to probably hold on that hammer reversal and for us to try and trade up by the end of the week. Friday is going to be the day, though, because if that vote takes place, right, we'll have the news late day Thursday probably, our time, and then the European market will either take off or tank on Friday. That's it for today and this week. Thanks, and see you next time.